Hi everyone, welcome to today's Vacuumlabs bootcamp webinar. The topic of today will be fintech trends and also financial services trends and how you could apply them or leverage them in your new or existing products. To introduce myself, my name is Rudolf Vido. I am product lead at Vacuumlabs, and my main day-to-day challenge is how to turn ideas into new products that are able to reach business and customer goals. Vacuumlabs is a company that provides design, product development, and also engineering and data science services. For a number of years, we are supporting clients across the globe, Europe, North America, and Asia. And we work with companies at all stages. That means we work with startups, scale-ups, and also corporations. And the topics we focus on are cryptocurrency and fintech. In the fintech, we look at the topics as community banking and similar ones. And also we have track record of working with interesting clients such as Standard Chartered, Twisto, Erste Group, Kiwi, Railsbank, Doconomy, Emurgo, Innovatrix, and others. And now back to the topic of today's webinar. So fintech industry is quickly evolving and changing, and that's why it's really important to understand what are the current growth projections and to understand what are the regional differences shaping the industry. And what is then important is to assess the trends that are happening on the market, and to get inspired or to get some idea how these trends can help you, and at the end evaluate your options, how you can leverage these insights, and how these insights and trends can help you to make your products better and to withstand the wear and tear of time. So our aim today will really be to look into what is happening in the fintech and the broader financial services industry, to explain new trends and also explain them on a concrete examples, so you can imagine how those trends are being manifested in everyday services, and also to provide you with ideas how to think about implementing these trends into your businesses. So the structure of today's webinar: we will start with the current state of the financial services industry, then we will go through the trends, and following with opportunities for innovation and growth, and we will close it down with the conclusions and key and wrapping up the key learnings from today's session. So let's start with the first part, which is the current state of the financial services industry. One way how we can look at the global financial services market is to look how or what is the value of all the companies within this industry. And looking at the data from 2021, the overall market value of all financial services companies was 23 trillion. And what is the expected growth till the year 2026? It's almost 10% yearly. So we see this it's really a huge market, and expectations of the growth is also quite strong. So this will take the industry from 23 trillion to 37 trillion in 2026. Now, if we look into the subset of financial services, which is fintech. So just for a quick definition, fintech is really the application of technology, and especially new technology, into the financial services to disrupt this industry. So as you can see, the growth of the fintech industry is double of what financial services will be growing. So here you can see some prediction, which is saying that the growth of the industry will be actually 20% every year. So that's really a double of how the financial services industry will be growing. Here the values are in billions. So you can see from 2021 till 2028, the size of the industry is predicted to triple in size. That's a really big opportunity for the companies to compete in this market, to bring new and fresh products and ideas, and to succeed with the customer trust. Now let's look at a different way how we could look into the fintech market, and this is by how much revenue this market captures. And as we can see, as the overall pie of the financial services, the fintech is currently capturing roughly 9% of the overall revenues of financial services industry. And what you can see, kind of the most, I would say, prominent, or where the competition is the fiercest, is the bank fintech, which is capturing 3% from the overall revenues of financial services, and the rest of the fintech share, which is 6%, is then covered by other use cases and other products. We can see payments as the biggest individual slice out of all the other use cases, and then the orange part is representing all the other areas of fintech, application of artificial intelligence, cryptocurrency, blockchain, or crowdfunding and lending. So all in all, the really great opportunity to further grow and take bigger part of the pie from the financial services industry. Another way how to look at fintech is by number of new startups or new companies entering into this space. As you can see, prediction here is saying that between, or not prediction, but this is actually the reality. So what happened from 2018 to 2021, the number of fintech companies doubled, and then some. So it went from 12K to 26K. Again, either showing us or hinting at relatively fierce competition. So it's not only that there is a great potential, but there is also big competition in this space. That's why it is important to come up with innovative solutions that can really capture customer attentions, so that you can be successful in the market. Key takeaways from this part is that financial services market will be growing quickly, but fintech will be growing 2 times faster. The second takeaway is that the competition is intense. The number of companies, as we have seen, is growing rapidly, and the overall market potential is vastly untapped. That means that fintechs constitute only 9% of yearly financial services industry revenue. So really the growth potential is big. On this slide, what we can see is that since the payment part of fintech is the second biggest use case, that the fintechs go into in terms of their revenue, what we can see here is how what are different ways how customers transact in different markets. What is important about trends is that trends are always location specific, I would say, and payments are is something relatively intimate for all of us, because each one of us and is used to transact in a different way. Someone prefers paying in cash. Someone prefers paying with a debit or credit card, or even QR payments, or paying from wallet. So it's important to take this into consideration. And what we see when looking at the regional perspective is that different regions or even different countries are used to transact and pay for services in different ways. To give you some examples, so for example, China. What is a strong trend there is that the use of super apps is really prevalent. So customers there prefer to use one application that covers different needs, like sending money, but also maybe ordering food, booking appointment with doctor and others. And the preferred way how to pay in stores and also online is using digital wallets, as they are predominantly used there. Then when we look at Japan, for example, we see that cash is still king in the physical stores, where 60% of transactions are still carried out in cash, and the rest is usually credit card. In the e-commerce, the credit cards are the dominant way how to pay, and also the QR codes are the second most preferred way how to pay. Overall for the APEC region, the trend is that QR code payments are expected to rise. And in terms of physical stores and e-commerce, digital wallets are really a hot trend in APEC. And for some countries, for example, Philippines, there is, but also Japan, there is still strong preference for cash, especially in physical transactions. When people are visiting shops, they prefer to pay in cash. But really the interesting trend here for whole APEC is the use of digital wallets, and how, for example, in some geographies they are even surpassing the use of banking. For example, in Philippines, roughly 70% of the total population, they have their digital wallets, but in terms of the penetration of banking services, that is much lower than that. So more people use wallets than their banking. And what is also interesting is that people in Philippines trust more their digital wallet providers than they trust actually their bank. Looking at some other regions, Middle East, in terms of trend, it is expected that not bank related payment providers will win in this geography. And in terms of stores and e-commerce, use of contactless cards is prevalent here, followed by the QR codes. In terms of EU states and countries, what we see in terms of trend is that buy now pay later is a strong trend and also rising trend. And in terms of using or paying in physical stores and e-commerce, so for physical stores, debit cards are really a prominent way how to pay. And in terms of e-commerce, digital wallets are leading in the 5 of the biggest markets in EU. Looking now into Africa, in terms of trend, Africa is actually jumping evolution stages where they are completely skipping widespread use of cards and are going basically from cash to mobile payments. So we see Africa going from cash to payments, and a lot of countries in APEC going from cash to digital wallets. Moving to America, in Canada, what is interesting in terms of trends, buy now, pay later is almost non-existent there. And in terms of preference to pay, over 50% transactions are done using credit card. In USA, in terms of trend, buy now, pay later and crypto interest and also usage is growing quickly. In physical stores, credit and debit cards are prominent way how to pay. In e-commerce, it's also complemented by digital use of digital wallets like PayPal, for example. In South America, the trends, there is a steady and a bit slower growth of buy now, pay later. And in physical stores and e-commerce, the clear preference is for using the credit cards. So to sum up, it is important to understand how different trends are showcasing in different regions, and also how people are used to transact in the region you are considering to expand into or to explore potential in. Now moving to the next part, trends in fintech. So what we can see here are the three selected trends we will be talking about today. One of them is super apps. So customers need usually when they're using their mobile phones, they need to switch different applications for different use cases. That means ordering the food, paying for bills, or ordering a taxi. But integrating these services into one application appears to be interesting or tempting both for customers and also businesses. So we will look into how what's happening with this trend, and also go through a concrete example of a super app which is successful with its approach of providing this breadth of services. The next trend is embedded finance. So what we see is that the customers are expecting to have seamless experience when they are consuming services, and even I think like having to switch into different application to finish the checkout process could mean that this is seen as disruptive for customers, and there could be a lost opportunity to sell goods on the side of the merchant. So we'll also look how what is happening with this trend, and an example of seamless embedding of finance into some other services. The last trend is e-wallets. As we already said in the previous part, this is preferred way how to pay in Asia, and this race in adoption of e-wallets is changing from capturing all the transactions that the customers are making to actually provide identity services and to be the one platform that serves as identity standard, and also then provides the identity to other services and authenticates the customer. And what is interesting with e-wallets is that they rely on having a large following, large user base, and then they usually expand into different services, and we'll also have a look at that. So super apps, let's start by explaining what actually is super app. So how you can think about super app is that this is really your Swiss Army knife of services. What it can do, it can consolidate into one place different applications for either customer or for the employee. So there could be super apps on the side of customer, but also on the employee side, you can think about, for example, enterprise software and similar. Okay, so why everyone thinks this is such a good idea to build super apps? In a relatively large survey, what the customers expressed is that 70% of them will actually or is actually interested in using a super app. So that means that they could use one application, one interface to carry out multiple tasks and to consume different services. In a way, this is logical, as all of us probably experienced that ordering something from eShop, then ordering taxi, then checking your account balance. It can mean that you switch between 5-6 different applications within minutes, and each application has a bit different interface that you need to adjust to, and there is different logic how you can find the information or execute the step you want to inside of the application. So it's only logical that it's relatively tempting to have one application where you could actually carry out multiple of these tasks or consume different services. So there is a big allure in super apps. Now let's look into an example. Super app. One of the really good examples is Grab. This is originally taxi ordering application similar to Uber that started in Asia, and they slowly expanded their offering. Firstly, they came out with a consumer wallet. That meant that customers could keep some money in their wallet and pay for rides from that wallet. Then they were collecting data about the customers to understand them better, and they also formed partnership with third-party consumer credit platform, so they could better score their customers, and also to better score their drivers. That means that by having a very good understanding of their drivers, what they could do is that they could score their riskiness and provide them financing for buying a new car to carry out the taxi services. And that's kind of what they did, first starting with microfinancing, and then moving also into providing credit solutions for customers, and providing travel and insurance services, and moving into enterprise services. And that means that as they expanded also into food delivery, they had more also, as they act as a marketplace. That means that they have B2C customers on one side and B2B businesses that offer their services through this super app to their B2C customers. And that means that they can also think about how to serve their B2B partners. And that's exactly what they are doing. So looking into how they can provide banking, financing, and other services also for their B2B partners of their platform. To have a look into into some of the functionalities and services that you can order while using Grab. So it's the transportation that was the original use case. Then you can order food. You can order different ways of transportation. So that means you can book e-scooter and use that. You can get the delivery of groceries. There is a loyalty system through which you can collect rewards. You can book hotels. You can split bills with your friends. You can read the news. There are regular promotions where the customers can utilize these promotions in order to get discount with various vendors. There are the financial services where you can get a credit or a loan. There is a traffic information to predict how long your journey would take. Also, recommendation of food based on comments or based on your previous behavior. There are videos in there, and there are games you can play. So as you can see, quite complex ecosystem of services that you can consume through one application. Moving on to the next trend we are going to discuss today, and this trend is embedded finance. So to explain what embedded finance is, this means placing of a financial product into a non-financial customer experience journey or platform. So to maybe imagine it the easiest, for example, Klarna, which is the buy now pay later platform, can seamlessly embed into your eShop experience. So imagine you are buying something on Amazon or some other eShop site, and you go into checkout, and there is option to pay also with Klarna, as you can choose like either pay with card from account, and one of the options will be also Klarna. And if you just choose this one, then you finish the checkout with that, and actually what you are getting is a loan on this journey, but you never left the eShop and the experience from there. To look at the embedded finance and how big of an opportunity it is, currently, if you look at 30 biggest global banks and insurers, their overall market value is 3.6 trillion. And if we look into the future, what is the predicted size of embedded payments, lending, and insurance? This is actually double of these 30 biggest banks and insurers. So that means that in the next 5 to 7 years, this provides a great opportunity to be the company that really taps into the potential of embedded finance and succeeds in this market. Moving to some examples. So what you can see on these slides is how different clients, in this case these are the companies actually offering the end service to the customer, how they partner with the partner companies which are providing the underlying financial product. Basically they are embedding, so the partners are embedding their financial products into the client products. And as you can see, in terms of client types, we have financial services, technology, and then other corporations. That means it's mostly here retailers, travels, and car companies. And on the top side, you can see what different fintech product domains these companies are using. And what is interesting here is that they are predominantly payment focused. So you can see, going left to right, that there are quite a lot of ticks on the bank accounts, cards, even wallets. Then there are account-to-account payments and open banking. Then you can see the cross-border payments, remittances, merchant acceptance. But once we go into transaction lending and other lending, there are not that many ticks. And what this tells, or what it shows, is that as the embedded finance started really with the payments, the lending and insurance are expected to be the next interesting things. The reason why they were not the first one is clear, as they are definitely more complex. they also carry their risk element or have more complex onboarding to use it seamlessly. So the payments which are easier to onboard were the first in the market. Okay. So to give you example of embedded finance, we will use the most popular example, which is Klarna. So what Klarna really does is it allows its customers to shop with a temporary Visa card. So they create temporary Visa card with which they are able to pay in a shop. And what it does, the Klarna performs a soft credit check. So this is not a full check as when you will be onboarding in a bank. So it creates it does this soft credit check of the customer and then pays the sum to the merchant. And how Klarna makes money? It basically charges its fees to the merchant, so it's not paid by the customers. But additional revenue streams for Klarna are also the interchange fees, and then any commissions or fees that are connected with the customers which are not paying on time. So the most popular product of Klarna is Pay in 3 or Pay in 4. That means that your purchase is being split into 3 payments or 4. In case of 3, you are paying 1/3 today, second third in 2 weeks, and the last remainder payment you pay in 4 weeks from today. So you have split your payment across 4 weeks, and as soon as you are paying these installments on time, you are not paying as a customer. You don't have any fees connected with that. But if you go into delay, if you are late with your payments, there are some extra fees connected with this. So to summarize how Klarna makes money, it's the primarily revenue comes from merchants who might be paying some percentage from the overall sell price. This could be 3-4%. The additional revenue is from the interchange fees and also then from the interest charged on the customers which are paying late. So that was the short overview of Klarna. Now moving to e-wallets. What is this is our last trend. So what is really e-wallet? E-wallet acts like an online account from where you can make transactions without any need of physical money or card. You can see some examples on this slide. It's PayPal, Samsung Pay, GrabPay, WeChat Pay, Alipay. All these provide wallets from which you can pay. Now let's have a look into how the e-wallet payment flow looks like. Usually, you need at the start of this journey, you need your either customer bank account or you need your card that you have from bank, and you top up your e-wallet. So you send money to your e-wallet account, and then when you purchase with your e-wallet during the checkout of, let's say, buying services or goods in eShop, the purchase amount is credited to the merchant. So that means that the e-wallet company sends the money to the merchant accounts, and in the billing and settlement step, the wallet provider is collecting the fees for making the transaction, and also the funds are paid to the merchant via payment gateway. So that's the actual moving of the money to the merchant account. In terms of types of wallets, what is interesting is that they are being created by different types of companies. So you can see e-commerce type of wallet, which were created or predominantly were created by companies from e-commerce sphere and are used mainly for paying online, like PayPal, Alipay, Amazon Pay. Then another interesting part of the wallets, which behave a bit different than, for example, the PayPal, is the Samsung Pay, Apple Pay, Google Pay. Basically, the phone manufacturers. And these wallets work more like kind of tokenizing or creating possibility to pay with your card via the phone. So moving your card into your phone. And usually in these wallets you don't have any way how to top them up or manage somehow your balance. So it's mainly a way how to move the card into the phone. The next one are the messenger apps. So this is WhatsApp or WeChat. So this also kind of natural way that since people are already communicating, they could be also transacting because the sending money, it's similar to having conversation with someone. So it's there is already kind of, you already know each other's phone numbers. You are connected through this platform, and sending the money is just sending extra information over this established communication link. Then transportation applications like Grab, and what we discussed, initially ordering taxis, and then starting or giving opportunity to customers to have a wallet there where they can top up their credit and then use it for paying for services. Next one is retail banks. Tinkoff, Veolia, and others. So these are retail banks that ventured into the e-wallet sphere. And the last example is the Telco networks. So Telco networks that created their e-wallet and created alternative way to pay for the customers. Moving into an example of e-wallet, so we will go through Apple Pay, how it works, and also where it is evolving. So when you are adding your credit or debit card to Apple Wallet, what basically happens is that the information about your personal account number is being shared with the Apple Pay servers, which then request the token from your card network. This means that you have either Visa or Amex or MasterCard or some other network card. So the Apple Pay servers need to communicate with this network, and what this network needs to then do is to contact the bank issuer. So the bank issuer is the institution or bank that issued your credit or debit card, and they ultimately needs to they need to validate the personal account number with the bank issuer. And once this validation is completed, then the card network generates a token, and this token is then returned to the Apple Pay servers, and then you can start using your Apple Pay with your card. So on this next slide, what we can see is how Apple Pay, by gaining the popularity, and a lot of people are using Apple Pay because it's simple. You can pay with your watch or you can pay with your phone. But where the Apple is now venturing by announcing the Pay Later. So this is a product which is similar to what we were discussing when we were discussing Klarna. And this is ultimately enabling when the customers are paying with Apple Pay, they can choose either they pay in full or they choose the pay later. And here we see similarity with Klarna. So in this case, the customer is offered to pay in 4 installments every 2 weeks, and then he can further track the order status and also see the past orders and manage the repayments. What is interesting in this case is that even though the phone manufacturers' wallets are relatively, they don't have that many functionalities, they captured significant customer base, and for them it will be interesting to see what they further do with this customer base. And as you can see, Apple is doing first steps, introducing the pay later, getting into the embedded payment, and it will be interesting to see how this further evolves and where it could take us in this space. Now moving into and maybe comparing the Apple Pay Later with some established buy now pay later players. So Apple Pay for sure has its limitations. So initially they will be launching the pay later in the US, where roughly 50% of the population owns iPhones. But this percentage is definitely lower worldwide, and they will probably never tap into Android. So kind of that's the first, let's say, limitation of Apple Pay, that it's basically available only on Apple. Then so what is interesting is that they are building this service on established way of payment. So 90% of merchants in US are already accepting Apple Pay. So that means that they can instantly they are basically built into their processes, and it's easy for them to offer straight away this service and have quite high merchant acceptance from the day one. This is something that current buy now pay later providers had a hard time to establish. They had to form partnerships individually with different e-shops and different e-commerce providers to have their breadth of network and to embed their services into the checkout processes. So in this, the size of the acceptance places, the Apple Pay is ahead in here, as it already created a very high penetration in terms of acceptance. Looking into the strengthening of the ecosystem, the pay later is another service that encourages users to buy things through Apple Pay more widely, as it's available and easy to use. What some of the app-based buy now pay later providers are doing is that they are luring their customers by adding additional discounts. And in terms of PayPal, there is even strong established online ecosystem. So even kind of merchants having their PayPal accounts, so they are relatively well established there. In terms of payment plan or flexibility of the product, it seems like Apple is now focusing on this 6-week repayment plan, and one way how to look at it is that they are preventing customers from long-term debt. So it's more like a short-term cash flow management. And many of the other buy now pay later companies are actually offering to customers repayments and schedules that can take a longer time to repay, but then they are also charging the customer additional fees. In terms of the supporting hardware, so Apple Pay Later available on iPhones, and for the other established buy now pay later players, some of them offer even physical cards and or provide management from a supporting application. So they have separate applications where you can manage your repayments and orders. As you can see, the Apple Pay Later will definitely be a big contender in the buy now pay later space, and it's to be seen how the established buy now pay later players will respond and how this play with will turn out. Now we went through the three main trends, and now we will make things a bit more practical by discussing opportunities for innovation and growth for your companies or products, or how you could think about these trends and how they could help you. So 3 ways how to look at the trends and how they could help you. One way could be the cooperation of or integration with the new trendy solutions. So you can think about cooperating with fintechs or integrating them into your products, and we will discuss a little bit more in a detail like how this could look across different trends, or what you can consider. Then what you can also do is to take inspiration from the trends, either the regional ones or the global ones, and incorporate them in your strategy process. What does that mean? That means you can think about okay, so embedded finance, it's being expanded further, embedding into additional services. What does it mean for my company, and is this trend something that we can leverage as a company, and that it makes sense to consider when building new products or adding new features, or not, or how does it impact us? Can this be something that can disrupt how we as a company make money? And also interesting thing how to look at trends is prediction, or looking into how the trends from other regions might impact your market. So that means sometimes the trends can spill over from one region to another. For example, if you look into digital wallets, they first became a thing in APEC. Now they are really seeing their renaissance in the USA. Also, buy now pay later originally started in Europe, now popular in Australia and US. So you can see as these trends are kind of moving from region to region with some alterations. But again, this is something what you can also take into consideration. So cooperation with established fintech players. Let's start with the embedded finance as a trend. So what does this mean? Couple examples here. If you are e-commerce company, what you can consider is to give your customers ability to pay for their purchases using some new methods like buy now pay later, installment plans, or digital wallets. So you can expand the checkout options for your customers, and this could mean that you have better conversions or you have less drop-offs of customers from your e-commerce platform. For the healthcare, how they could look into embedded finance. So again, it could be that you provide your customers ability to pay for their medical procedures using various methods such as digital wallets, or offer the customers insurance products like a health saving account or medical saving account or health insurance or financing of your healthcare services. Looking into gaming, so customers again, you can add new in-game purchases using digital wallets or offer customers access to credit or loans to finance their purchases. So these are three examples, but yeah, like utilizing the existing players in the embedded finance market and thinking how you could incorporate this into your customers' user journey, so their experience is more seamless, and also your business is getting a value from this. So there is less drop off at the later stage of the shopping process. Now looking into super apps, so how you could cooperate with established super apps. One way how you could look at this is using super app as distribution channel for your for offering your services. So you can reach out to the provider of the super app, and you could agree that they would act as marketplace for your insurance, lending, or some other financial services that they don't yet have in their super app. So this could be a win-win scenario, how you could cooperate with a super app partner. Another way how you could cooperate with super app is that, for example, if you are established bank, what you could do is to provide either liquidity or to enable new financial products on the super app. So it will be it could be a product of the super app, but on the background you could be the provider of overall liquidity, or you could build together their product. So in the first case, we are discussing that this will be the super app reselling your products, and in this second case is that the bank is providing the infrastructure for the product of the super app. Now moving on to wallets. So one of the ways how to cooperate, obviously introducing new payment option. So you could look into how your customers are used to pay, and if there are any wallets that they regularly use. And this is something that you could think about, that you would also add their preferred wallet into your payment and checkout process. Another one is that you could collaborate with the provider of the wallet to create a joint package of services that is created between the wallet provider and if you are going from the background of telco and or bank, this could be a jointly beneficial package that provides certain savings or extra benefits to the wallet customers, and it brings you new customers from that wallet, and it lowers your acquisition costs connected with the new customers. So these were some ways how you could think about these trends and how you could leverage them through cooperation with established players that are already using these trends in their businesses. Now we will look into steps. So when you are thinking about cooperating with fintechs and incorporating their offering into your product or your offering into their product, how to think about this? So couple ideas or some things not to forget. So I think where it's good to start is to start with identification of customer pain points. So really talk to your customers, understand what are their current pain points. Is it difficult to pay for your goods? Do they struggle with money to afford your services? What is it really that drives them to not complete that checkout process, or are really dropping off and it is not working? So really focus on identifying their pain points and where they occur. The next step is define the problem. So clearly define from the pain points and discussions you had with your customers. Now move into defining what is the problem, and how to think about defining the problem is try to focus on 3 parts, and that means like when I as a customer try certain action, this is the outcome. So usually it doesn't go as planned, and this is how it makes me feel. And by stating the problem in this way, it will allow you to understand what the customers are usually trying, what is usually the wrong outcome, and also what is the feeling that occurs there. So you can better zoom in on how to solve it in the best way. And what really helps when defining the problem is not just to have the problem, but to have specific customer persona in mind when you define the problem. So it's easier to think that this is a Jane who is 23-year-old student, and this is how she thinks about her financial behavior in a certain way, and this is the problem she's experiencing. So by creating this mental model in terms of having the customer persona, it's so much easier for you than to define the problem well. So the problem in my mind would be to have the problem definition and the clear customer persona. So you have example customer in mind for whom you will be helping. Next step is research and compare possible partners. So this means look into the market, try to identify the right partners for you, and try to look and understand how it would be to cooperate with them. So what might be the speed of onboarding into using their services? What are some of their future technical plans? How does they align with your product roadmap? What are the costs involved, one-off and regular ones? Ideally, also look at the high-level business case to assess the business viability of cooperating with these partners. So what will be the benefits that it brings to you over long term, and also what are the connected costs, and does it really make business sense? Once you went through this, so you identify your customer pain points, you have defined the problem, and you have researched and compared the possible partners, you can now evaluate the solution or solutions and decide whether to proceed to implementation. So really evaluate different solutions based on their business viability, ease of use, speed of implementation, how they align with your vision and strategy. and try to make a decision what is the one that has the best attributes that can help you in future. So not only to help your customers and their pain points, but are also helping you as a business to grow or to fulfill your business goals. So these will be the 4 steps that I would recommend you not to forget about when looking into possible cooperation with fintech partners. Concluding this part, we are getting into the conclusion. So to summarize the key points from today's webinar, every region is different. Fintech is expected to grow 2 times as fast as financial services. The competition is intense, but this is really bringing or creating a great opportunity. Before expanding into new markets, it is really important to understand differences in how people transact, how they approach their money, how they think about money. There could be really stark differences, and what you take granted in one market might be really different in another market. When adapting trends from other regions, try to think how people approach their money, and also how big difference this new trend would be for them. Because you can have a great idea of introducing digital wallets in certain country in Europe, just to find out that debit cards, credit cards are widespread, everyone is using them, and you are not in a significant way making it easier for those people to transact. So to give example, in APEC, in a lot of countries, the customers were used to pay with cash, and now the e-wallets help them to pay in much better way. But then comparing it to some other country where people already have the necessarily financial infrastructure, they have cards, they can pay with their phone and so on, what extra benefit would they have from adopting your e-wallet, for example? So I think it's important to think if the change or the trend you are trying to ride and on based on which you want to build your products, if this really also makes sense for the people from that market, and there is big enough incentive for them to adapt into this. The 3 key trends we discussed. So remember the super apps, Swiss Army knife, application that combines functionality of many. So you can think about Uber, Revolut, Volt, Amazon in one application. The next one, embedded finance, including of financial services into non-financial services, is non-financial services to provide seamless experience, and the wallets, online account from which you can make payments. So all of these are interesting trends to consider. And now moving into opportunities for growth. So 3 ways how to think about this: either cooperate and integrate with the fintechs. So this means that you could look into established fintech companies and think about how you could jointly create new products or cooperate in a way that creates value for your customers. You can also get inspired for your strategy refresh. So think about, okay, how these trends are impacting or could be impacting my business, and what to do in order to stay competitive. And also the last point is look out for trends from other regions and how they might impact your region. So how likely is it that digital wallet trends will go into EMEA and become popular there? What would it mean for your business? And is it something you need to prepare for or not? So that's a wrap up for today's webinar. Thank you all for attending, and I hope you gain an insight or two into the future of financial services. See you next time.